So everyone, this is the second video on accounting equation. So just to remind you, the accounting equation formula is capital plus liabilities is equal to assets. So now let's look at this second problem about the accounting. So the question says that show the accounting equation for the following transactions. So the first transaction says Gopinath started business with cash for rupees 25,000. So under this first transaction, we'll have capital and cash. Then the second one says purchase goods from Sham. So in this case, the word cash or bank is not being mentioned. So it means that this good has been purchased on credit. So under the second transaction, we'll have stock for rupees 10,000 and also creditors for rupees 10,000. Then the third one says sold goods to Sohan costing rupees 1,800, but it was sold for rupees 1,500. So since this goods has been sold on credit, since the word cash or bank is not being mentioned in transaction, so it means that the goods are being sold on credit. So if goods are being sold on credit, Sohan is a debtor, so he has to pay to the business in the future. And also from the goods or from the stock, goods will be reduced by rupees 1,800. So point to be noted here is that the cost of the goods is 1,800 and it's being sold for rupees 1,500. So it means that there's a discount of rupees 300. So the effect on the account equation is that from the stock, that is goods will be deducted for rupees 1,800 and there's a discount of rupees 300, that is 1,800 minus 1,500. So there's a discount of rupees 300 which is being provided by the business to Sohan. So in this case, this discount which is being provided to Sohan will reduce the capital of the owner. Then the fourth one says that Gopinath withdrew from business for rupees 5,000. So it means that this owner has withdrew from the business cash for rupees 5,000. So in this case, cash will be deducted by rupees 5,000 and also capital will reduce by rupees 5,000. So now let us look at the solution. Now if you look at the solution, that is the first transaction. It says Gopinath started business with cash for rupees 25,000. So now if you look from the asset, cash is rupees 25,000. So since it is a contribution made by the owner to the business, so it is capital. So you can see on the right hand side under the capital rupees 25,000. So again, let me repeat, in the accounting equation, asset should also be equal to liabilities plus capital. So 25,000 on the asset side, then on the capital or the liabilities plus capital is 25,000. Then for the second transaction says purchase goods from Shams. Remember here, in this case, the goods will be purchased on credit. So since goods has been purchased, under the asset side, stock will be rupees 10,000 and on the liability side, creditors will appear for rupees 10,000. So again here the accounting equation should be equal. So 25,000 plus 10,000 under the asset side will be 35,000. Also the liabilities plus capital will be 35,000. Then the third one is goods sold to Sohan. So remember the goods which is costing rupees 1,800. So from the stock, goods will reduce by 1,800. So if you see under the stock column, 10,000 minus 1,800. So the remaining stock after selling the goods to Sohan, the remaining stock will be 8,200. And since this goods has been sold on credit, it means that this Sohan has to pay to the business in the future. So in that case, Sohan is the debtors of the business. So in that case, if you look on the asset side, debtors arise for rupees 1,500. Remember here, the good cost rupees 1,800 but has been sold at rupees 1,500. So it means that Sohan has to pay to the business only 1,500. So there's a discount of 300. So this discount of rupees 300 will reduce the capital of the owner. So that is why if you look from the capital, that is the right hand side of the accounting equation, from the capital rupees 300 has been deducted. So after deducting rupees 300, your capital remains 24,700. Now the last transaction says Gopinath withdrew from business. So we withdrew from business rupees 5,000. So if we taken out the money from the business, cash will be reduced by 5,000. So 25,000 minus 5,000 will be 20,000. And it will also affect the capital. So from the capital, you can see on the left, sorry, on the right hand side, 24,700 minus 5,000 will be 19,700. So if you add both the asset side and the liability side, you'll get 29,700 on both sides. So the accounting equation is equal, that is asset is equal to liabilities plus capital.